Little, and this is your daily TA wrap, where we take a look at these markets and we do it from a neoclassical perspective, asking ourselves each day, what happened today? What does it tell us about the coming days? We do that through the neoclassical takes. We're going to look at 3 or 4 of those again tonight, because tonight we actually have some setups that give us indications, and that's what you're always looking for. You're looking for indications as to what's next, and today we got some of those, so we'll look at that. As far as when we do this show, we do it 4 times a week, Monday through Thursday, live at 9 o'clock Eastern Time, here from the base of the beautiful, the most gorgeous of the Rocky Mountains. I love where I live, folks. It's a beautiful place. And this time of the year is especially a gorgeous setting out there. I live in the canyons, and the sun comes down. It's beaming at this time of the night. It's a spectacular sight. As far as what happened today, let's first look at the ending numbers here. We actually had that Russell pick back up and be a leader again tonight. And that was a tell the last 2 days. It tested to the downside. We'll look at that chart. And then it was saying it was going to try to go higher, and that's what it tried to do today. And now it's setting up a particular structure that could take it even higher. S&P's up, 3 points, 3.5 points. 6 bars now. They have the setup to where if they do retest, they more than likely will regenerate now. We'll look at that setup. That's another neoclassical concept that, gives you indications about what to expect, and certainly gives you what to measure against. Composite, 0.41%, 17 points higher. The index was the industrials wasn't moving that much. The index was lagging a little bit here, 0.36, 13.5 points higher. And that was despite Apple pushing pretty hard. Metals, commodities, forget it, right? Just not happening. So if you look at those guys, all of them down. Copper got hit pretty hard. There was some indications of some, multiple sales of contracts on copper in China. In their market, some sort of investigation going on, so that hit that market. Gold can't move. Silver not moving either. And as far as oil did a big reversal today off supply numbers. Dollar keeps inching higher. Bonds, they can't move, but they actually did a reversal today, and we'll look at those. All right, let's go to the charts here, because there's a lot to cover. And the first thing we'll do is we'll start out with the GSBC, the S&P 500. And what was I just talking about? Well, I was talking about the construct that exists in the neoclassical, and that is that when you get a breakout, even if it's suspect, right? And so many people look at this and say, oh, it's lower volume, this thing's going to fail. Well, maybe it will, maybe it won't. It really depends on what happens after the breakout. You get 6 bars to the upside. That's what we have here, 6 of them now. I talked about this a week and a half ago, that if we got that type of setup, right, then the retest regenerate, which means when we come back to visit those highs, more than likely, and now has a very high probability of success. If you come back within 6, it's like a 50-50 shot, right? You don't have a very good chance. But if you come back after, and it depends on the type of trend in terms of the suspect versus the confirmed. Also depends on the time frame, but it's somewhere around 80%. It's a much higher probability that when this comes back, it will find support and be bought, and usually right around the top of that retest zone, which is that prior swing point high, which in this case also lines up with this one, gives you a nice zone on the way back down. If and when that comes back, I suspect they're going to try to buy it there. That's where I would buy, that's where you would buy, that's where the market is going to look to buy it. If it fails, that's a huge indicator. If it succeeds, that's also the indicator. That's the test point. That's where you can find out what the market really wants to do. If it comes back If it holds, and now we know it has a higher probability of exactly doing that, then when we come back, let's assume we come back now, and we do come back to that point, that sets up the next ABCD structure to the upside. Remember, there's a 1950 and change number out there on the monthly still, and this would take us to that target, assuming we were to pull back from this price point. That's the GSPC, the S&P 500. The Dow's just hanging at the highs, nothing to look at there. If we go over and look at the Nasdaq Composite, you have the same setup. You've got more than 5 and more than 6 bars, or 7 now, on the breakout. When it comes back, what's that mean? Probably going to hold. It's also trying to get into this April 4th bar. That bar is the breakdown bar. Now, this is a broader composite, right? It doesn't have as many of the big caps that you see over in the S&P 500. It also doesn't have, you know, the NDX 100, the more concentrated, the largest in this group. They're already at new highs. This one's still trying to get back over the breakdown bar. It's set up, sideways move, to do that on the Draghi ECB, which is tomorrow. So this one's set up to try to break higher. If it does pull back, more than likely it's going to get bought. The NDX closes at new highs. Pushing over the new highs, has been consolidating. This one can go higher. The Russell was trying to pull back, and remember, we looked at this, and it was the only index the last 2 days telling us that the market wanted to try to trade higher. And that was because it traded back into anchored support. No, it's not anchored support, but a big bar there of volume, right? It's a test point. It's something you can test again. It's a swing point, wide price, volume. It's the high of the swing point low reversal bar. Trades into it, doesn't have the volume, right? Comparatively, says it's going to try to trade higher. Trades into it again last night, doesn't have the volume, says it's going to try to trade higher. Today, trades into it one more time and then does flip around and does trade higher. This one also, the weakest, is set up to try to push higher again. The setup's there. So we'll see if Draghi delivers. The indexes are suggesting that he's going to, and that we're going to get a pop off his news, not a drop. Consider, the fact that if we get the retrace, it's likely going to hold now. Not only here in 2 of the indexes, but also in the sectors. I mean, if we pop over and we look at some of these sectors, there's about 3 or 4 of them now set up that way. Clearly the IYT, if it were to retrace, is going to find some support, and that would be nothing to do with the retest regen, just simply support off the large bar up. But if you go over some of these others, like the SOX, the SOX just got over the highs, but it had a breakout back here, and it hasn't retested and regenerated into either of those. More than 6 bars, right? On this swing point high here, it's only 2 bars, which means it could retest, regen all the way back to here, the 8058 number. So even though we've got successive breaks of highs, there was one here, there's another one there, now you've got this one up here. A retest regen would be this area, and since it's more than 6 bars, it would probably be the top of it, and that is up in this area, right? So that would be a retest regen, more than likely will hold. XLE, it's not the same. XLF would probably hold, right? Your 6 bars now over 2 swing point high breaks here. And actually that one's, I have to take that back, because this one actually tested right off the get-go. So this was a little bit different. But it is over 2 swing point highs, has pushed higher, still hasn't set up a B point. This would just be setting up a B point, and it would find support probably back into this area here, right into that area. So still would find support, although it's a different construct. Let me see, what are the other ones? Oh, XLK, I think this one actually did a breakout as well, and that one I don't think tested 3693. It actually did. It tested the next bar. So that was already done as retest regen 2. But clearly, that's a long way back down. When you push that far, if you were to come down big and hard over 1, 2, 3 bars, it's going to be hard to break it down right off the bat. You're probably going to get a bounce out of it if nothing else. And that's what the retest regen really is keyed on. So there's a few of the sectors doing that. Another one that's doing it, XLY. This has been actually the weakest, but it did break over the swing point high, has not tested back, certainly hasn't tested into that one. I don't think it's tested this one. 64.93, did not get back to it. That's more than 6 bars. If this comes back, probably going to set up a buy. This one has been, the discretionary has been one that has been overlooked, right? Overlooked in the sense that it hasn't been the strongest. It just is coming into that swing point, well, the breakdown bar, the 4-4 bar, coming into it. I would suspect that nobody would want to buy this on the way back, but more than likely this is going to be one of the better buys on the way back, right into that area. So the 65, what is that, about 65 area probably is going to be a good spot on the XLY when the retest regen comes back in to do it. So you have it on the sectors, you have it on the indexes, and if you look overseas, you actually have the setup overseas to take this higher off of Draghi. And what I'm talking about there in particular is Europe. And so let me pop over to the world markets and let me pull Europe up. And I'll start with the strongest one, which is Germany. And why is Germany the strongest? Well, because I believe people are recognizing that if they do the longer term refinancing operations, the LTRO, which I couldn't think of the acronym the other day, that QE program is going to push money into the peripherals. In other words, it's going to push money into all the other countries within the European state or the European Union. And what does Germany do best? It exports. And so if there's new money going into these peripheral countries, then what's going to happen? They're going to buy things, right? Plants, equipment, goods, whatever. And who's the one most likely to benefit? Is Germany. And Germany's been sitting up here, it pushed higher in anticipation of easing. Now it's been sitting sideways, and this is the strongest one, sitting sideways at multi-year highs. This one is set up to make another run. And by another run, I mean another ABCD structure to the upside. So Germany could get a potential big push, especially if the LTRO comes out tomorrow. And you also see it elsewhere. So if you look at the FTSE, and if you look at the CACs, these are the weaker of the two, or there's the big three, but they're hanging up there at the highs. And they've been going sideways too, so they're set up to run as well. So if you think about, was it going to be a straight push into the news or some sort of a pullback? Well, in the area that's most affected, it was a pullback sideways, can push higher on the news. Does look like it's set up to try to do that. Elsewhere around the world, markets at new highs or setting new highs in almost all the countries. So from an index perspective around the world, they're all sitting at highs. They're all waiting on the big news. In Europe proper, they've done what they need to try to push higher on the news. So it looks to me that the markets are telling us that we're going to get some sort of a push. The only thing that seems to be suggesting otherwise is over in the auxiliary markets, and I'm talking about the bonds in particular, because if I look at the bonds actually look ready to flip around. And I'm not sure how that fits in with this thesis, because the low yesterday, 111.51, today it undercuts it, closes over it. That's a 2-bar. It's not really a 2-bar. It's an under-over on the setup here. Whether that's going to mean that we get a push back up, doesn't have to, but it is an under-over, and that certainly could get some sort of a bounce as a result of it. So bonds are the only ones not looking like that. If I look at the gold market, this thing can't move. That would also suggest that we're going to get a push by the equities higher. That's tied, of course, to the euro. The euro looks like it wants to blow out these lows even farther. The dollar sitting at the highs wants to go higher. Everywhere I look, it just looks like this market's set up to pop before it retraces. And if you think about it, just from a perspective, you know, I mean, you hear, you read, you see, where do you think people are braced? Right? Are they braced for more upside or for the downside? It looks to me like everyone's bracing for the downside. Folks, when everybody gets on one side of the boat, it's usually not a good sign for that side of the boat. It's usually the other side that gets, you know, that gets the move. And right now, it just feels like most people are expecting huge volatility, are expecting prices to crater on a sell the news. It appears that way. Now that's not, you know, that's just my trader sense telling me that. There's nothing definitive that I can point out. It just feels that way from everything I read and see. The other thing that one should consider is where we are in the calendar. And you always have to think about that, especially on a quarterly basis, because on a quarterly basis, brokerages, institutions have to push out their reports. They have to say where they are, how well they did for you or didn't do for you, and so forth. They have to measure up. Well, what do they typically measure up against? S&P 500. Who's beating the S&P 500 this year? Not very many. So if you're not beating it, reports got to go out in about 3-4 weeks. What are you going to do? So, if this market starts to move higher, you're going to have to scramble to get long. You're going to have to scramble to get them alongside. That's another kind of a melt up kind of possibility that could occur as this month plays out as a result of LTRO, if in fact they pull that bazooka out in Europe tomorrow. So that's an overview. That's kind of where my mind is right now. That's what the neoclassical perspective is telling me in terms of the technical takes. And it's where I'm at. It's where my head is. Let's see here. What do we got? Google. We're still looking at Goog. Let's see what Goog did today. All right. It came in with about the same volume. 1.8, 1.81, a little bit lighter. And let me see, it was testing into this bar, 538.45. Didn't quite get into it. Yeah, it could still trade lower. This can still certainly trade into this low, which is the April 15th bar. But you've got the huge volume bar here on the way down. The bottom of that's 531. It could get as low as 531. If the general markets work higher, Google's going to get pulled higher. But if we do get a surprise tomorrow and we do get a sell the news, I think Google can reach down to 531. So I don't think Google told you anything today that would tell you that it's going higher or lower tomorrow. It isn't under over, but the volume is almost equal, so that doesn't help. So there's really nothing here to tell you on Google. If you want to email me, you can do so at support@TA Today. You can do that anytime, during the show, before the show, whenever. You can also text me, 303-912-9110. And of course, I will look at your stocks and we'll try to analyze them as you so desire. Let's look at some of the stocks that were moving today. Let's see what we got here. So I'll look at some of these. I don't usually have time, but I have a little time tonight. So I'm going to look at some of these stocks that were moving big today and see what they look like. So Mankind. It's putting on a Mankind move, isn't it? Let me see what the weekly looks like. Yeah, it's a nice breakout, nice extension. You know, this thing's got something going. And that was a huge bar. I don't know if that was off earnings. It looks like about the earnings time. So a huge reversal, spike over the highs. I don't know. That looks pretty good. I mean, there's a bunch of these that have been pushing. Another one today that pushed heavy was insurance companies. I've noticed insurance companies are pushing higher as rates go up. Boy, that's got something to do with more than just rates going up. It looks like somebody's buying these guys out. Let's look at some of the big names like General Motors. And that's a breakout over multiple swing point highs. Let's see what it looks like on the weekly. And on the weekly, it's not quite as clear. Yeah, this can make it up to 37.56, maybe even at a high 38. And given that it just broke multiples, yeah, this is pushing nicely. It looks like a lot of short covering. I think it'd get up there. So GM looks pretty good. Let's see what Ford looks like. And Ford over the highs as well. 2 swing points, breaks them. And starting to get the extension off of that. Let's see what the weekly looks like. And the automakers got good news, and it's got a breakout going on the weekly as well. So these look to go higher. What's the other one? I can't think of the other one. Let's see what else is out here today. Let's look at some of the social guys. How about Facebook? So Facebook on a weekly, just consolidating on a daily. Wow, so now Facebook, this is an interesting one. So you break over multiple swing points. That top was 61.89, and it hasn't tested it. So you break over it, you got 1, 2, 3, 4, 5, 6 bars now. So here's another one of those that you push higher, you get 6 bars over the highs. That means that if it does fade back into them, it's probably going to get bought. And you're looking at a break of 3 more swing points, an attempt to break 3 more. This thing is set up to try to run. Going back to that weekly, 63.18. Yeah, it's right at it. It's right at the cusp. This thing can pop up to 67 before you know it. Yeah, so Facebook's about ready. Twitter. Let's look at Twitter. Down in the dumps. Okay, so you got this wide price spread bar, right, that's going to hold price for a while. Top of it's 39 or roughly 40, bottom of it's 29.5. You got a big bar inside of it. Let's see what the daily looks like. Yeah, this thing is, I think you're going to be able to test this top, but this just isn't going anywhere for a while. And I wouldn't be surprised to see it test the bottom again too. So this is just a big range trade, and you know, because it's got a big range, it's playable, right? I mean, talking about $7 on a $30, that's a big move. So playable, but not going anywhere. And it's one of those, if you're playing it, you don't want to stay in it too long because it can come down fast on you still. What are some of the other social medias? Somebody pop some of those in, I'll look at them. Let me see what else there is. Let's go to some of the bank stocks since the banks have been moving. Let's look at Wells Fargo, which is the leader, hanging at the highs on the daily. Now, that's a good looking chart. BRK dash A, I believe it is. Actually, dash B is probably the one we want. BRK dash B. Yeah, so Berkshire Hathaway, yeah, that doesn't look too good. How about JP Morgan? JP Morgan's just trying to get back up to where it broke down from. Citigroup, same thing. These bank stocks, if it wasn't for Wells Fargo, they still would be, hovering at lows. Wells Fargo is what's keeping them up. Wells Fargo is the heaviest weighting in the group. Bank of America. I was trying to think of the other one. Bank of America. And that one can't move. They're all three of those hanging at the lows in bad shape. And all three of them don't look like they're going anywhere soon. Just nothing there. Let's see, what else? Actually, with the gold stocks, let's go look and see what they're doing. Alright, let's look through some of the big ones right quick. I've got a couple more minutes. So, not G, but GG. So, Gold Corp at the lows. That one looks terrible. AEM, let's see what... Actually, let's put these on a weekly. So, AEM on a weekly, coming back in. It doesn't look too bad. Gold Corp on a weekly. And that can come lower. Gold. That one looks pretty good. So AEM, gold, they still look pretty good. How about Newmont? And Newmont, actually Newmont's trying to flip around. All right, how about Barracks? And Barrick doesn't look that good. Coming down to test that low. Doesn't look nearly as well. And some of the smaller ones, what are some of those? I don't watch them enough anymore. NG, I believe, is one of them. Nova, not that good. Yeah, and gold's still struggling. How about the silver stocks? How about PAS? That one doesn't look too bad. So there's like 2 or 3 that still look pretty good. So when gold does flip around, you want to look at the strongest ones that are out there because they're the ones, these things move 30-40%. So you want to look at them and keep them on your radar because you can get big moves in them. SLV, Silver Wheaton, that one looks pretty bad. If we go over to like copper and gold, FCX, that one's still looking good. RGLD, which is kind of a financier of gold stocks, that one actually looks really good. FNV, which is in the same boat but also oil, that one also looks pretty good. So there are some good names out there still. Just waiting on this market to actually firm up. All right, I'm about out of time here. It looks to me like this market is set to try and pop, and I suspect that pop, if it comes, is going to be short covering. And because I believe there's a lot of people positioned against this move and expecting to sell the news tomorrow. And if Draghi does set the tone like it looks like he may, we're going to see a lot of pressure put on the short positions, the hedges, whatever they are. And that's going to lead to a pop in these markets if in fact it plays out that way. I would expect some sort of a push up and then you finally get a retrace. Folks, thanks for joining me. Have a great night. And we'll see what the powers do tomorrow, whether they actually push these markets some more or not. But until then, I'm LA. This is and it was your daily TA wrap. Thank you for being there. Tell a friend, tell two. And until next time, take care. Good night, folks. I'll see you next time.